We're making the riskier, harder, less safe choice. We obviously think we'll be right. We've gone through everything intensely, sourcing, documents, everything. We are leaving a 5% window for, it's just like ESPN. If you've ever seen the game percentage, it could be 20-0 with a minute left. It's still not 100, it's 99. So we're going to wait to go to 100 until they're approved. But the 5% would be likely a possible delay. We just have some issue with one of the issuers or something is snagged. We need a week or a month. I don't know. That would be like 4% of that 5%. The 1% would be the unthinkable. Joe Biden calls up Gensler and Warren and they say, we just can't do this. And there's like presidential intervention or something. Those would be the two things that make up that 5%.
Bloomberg ETF reporters James Seffard and Eric Balchunas have been covering all the news and analysis around the multiple spot Bitcoin ETF applications that are now waiting for the SEC to approve one. While most were still pessimistic about finally receiving the SEC clearance, Eric and James announced a 9 possibility of acceptance a few months ago. According to one of their interviews, the analysts mentioned that while corporations like Fidelity and BlackRock were interested, Grayscale's court triumph over the SEC was the deal breaker. The District of Columbia Circuit of Appeals handed down its final decision in the asset management company VSES case in August of last year, compelling the SEC to reconsider its decision to deny the asset manager's application for a spot Bitcoin. In its ruling, the appeals court found that the CC's decision to deny Grayscale's Bitcoin ETF application lacked reasonable basis. The judge emphasized that the CC's claim regarding the manipulation of spot Bitcoin ETFs was without merit, as the agency had previously authorized funds based on futures and failed to present sufficient evidence to demonstrate that the two products are not substantially comparable. As Eric and James pointed out, the decision was a watershed moment, and they were nearly positive that this was occurring because of it. Numerous fear, uncertainty, and doubt events have transpired since then, with one such event being a Matrixport research stating that the SEC is unlikely to approve any spot Bitcoin ETF until likely the latter half of 2024. The crypto community on Twitter was rocked by yet another horrific event on Tuesday. Approval of spot Bitcoin ETFs was announced in a post by the CC's official account. But then, using the same platform, SEC Chair Gary Gensler announced that the SEC's account had been compromised and that the news of the approval had not been authorized, which happened around 15 minutes later. There was a big reaction from the crypto community on Twitter to Gensler's comments and the question of whether this will postpone approval that is anticipated later today. Still, nothing has budged Eric's and James's conviction that this is actually taking place. Coming up next, we have excerpts from their interview with Unchained as well as other noteworthy developments from them. Analysts discuss the two possible outcomes that would prevent the SEC from approving the deals today in an interview with Laura Shin. For more videos like this, please subscribe to the channel, hit like, and watch till the very end. Much obliged, and have fun. What is the probability, given that it is less than 5 likely to be rejected, James? Yeah, I don't really have anything to add to what Eric said. The only thing I would say is that if they do need to delay for those issues to be addressed, they basically need to ask Cathie Wood's ARK and Ophelia's 21 shares to withdraw their application, in my opinion. In theory, that would get them until March. But with ARK or 21 shares, there's practically no way I'm going to pull that off. Is there? For example, I require concrete assurances that my approval order will be issued on the same March date as all others. Since BlackRock submitted months after they did, the subsequent deadline would fall on that date. However, in our opinion, there is a 95% probability that these items will be passed by Wednesday. For quite some time now, we have been predicting that this would occur between January 8th and January 10th. Despite numerous news reports attempting to shift the focus to last week and stating other things, we remained at that point. Obviously, we're crossing our fingers that that prediction comes true, but we're also very certain that it will happen within the next 2 days. James and I were even debating the question of how they could approve if they were suing Coinbase 3 or 4 months ago. Also, how about the matter of the custodian? After that, however, we began to hear from SEC employees that they were making progress on this and that the problem was on the 10th level. Then Gary explains that the courts often dictate their authority, which sounded very Genslish to me, because it said, hey, the court is forcing us to do this even though we don't want to yet. Could you please clarify the matter with the 10th floor? Preliminary reports indicated that this was relocated to the 10th floor, which is where the commissioners are located. Upon receipt of a filing, it is often unnecessary to escalate the matter to higher-ups. Just as at the Department of Motor Vehicles DMVF, the corporate finance team handles filings. However, this continued all the way to the 10th story, and since we are on the 10th floor, it signifies that Gary is instructing both groups to collaborate with the issuers. So I believe it will happen through a direct, what the fuck is it called, delegated authority, even if a vote is held, which I seriously doubt will happen. Since he oversaw the entire operation, though, Gary would have to say yes. And we're aware that we have two. By the way, James, may I ask you his name? There are 3 finished Ueda. They were already approved in the last cycle. You might ask, are you suggesting that Gary would be a no because he is the only one? I mean, that's just like incredibly nasty, right? He would have directed the whole operation and the crew would have worked through the holidays to accomplish it. It's so far out there that considering it is almost impossible. Applicants have identified their apps in response to a request from the CEC. Apps are organizations with significant purchasing power that are responsible for purchasing and selling the underlying asset of an ETF. This ensures that the fund always has enough liquidity. Although some companies have named 2 or 3 authorized participants, others have named more with hashtags listing no less than 15, since each of the about 12 applications has the option to designate an unlimited number of authorized participants. Among the applicants, JP Morgan is on 3 different lists, and Jane Street Capital has already inked agreements with all of them. Rumor has it that other major financial services companies, such as Goldman Sachs, are interested in getting in on the action as well. Both Eric and James think this bodes well for the item's eventual launch and for the approval process in general. Additional interview excerpts are available here. Almost predictably, JP Morgan caught me off guard. It was Jamie Dimon's statement regarding crypto about a month ago that used quite new wording, and now they're bringing it up. Yeah, and then he made a remark about how the government should just shut it down. He uses some strong language. And now look at them playing a role in the Bitcoin ecosystem that makes it easier for Americans to buy Bitcoin. While it may be unusual, it is possible for a CEO to make statements that go against the grain of the company's values. It caught me off guard, but I had also heard that the major Wall Street banks would not be participating, at least not initially. Therefore, I was anticipating seeing Jane Street and Virtu practically everywhere. So we noticed Wall Street James brought up a couple more, and then there's your Goldman story, which you hinted at earlier. Having more of these large financial institutions involved will improve competition, which in turn will lead to tighter spreads. So that's excellent news. The concept is sound, and these are dependable. Safe businesses, too. In my view, app diversification is what you should strive towards. Having Virtu or Jane Street take the whole load is great news, in my opinion, so it's great to see. I must admit that JP Morgan did catch me slightly off guard. This time due to Jamie Dimon. In this profession, everyone follows the herd mentality. So, when Goldman sees JP Morgan doing something, they think, hey, we want in on that too. Why aren't we doing this too? Is a common reaction among some bosses. Thus, that is what piqued Goldman's interest, in my view. Therefore, it is what will pique the interest of other major Wall Street banks. JP Morgan has, in an odd sense, served as a magnet for other major Wall Street banks to become engaged with this. Contrarily, I had heard rumors that they were going to take their time deciding whether or not to become involved, as they were wary of the SEC and some government officials' disapproval. The company's core values and culture do not align with this. Instead of commodities, they focus on stocks and bonds, which in their view have intrinsic worth and investment returns. Value of a good is just the amount that other people are willing to pay for it. Is it possible that they might release one in the future? Clearly not in their DNA. In contrast to this year and next, I would suggest 5 or 10 years. So it seems like Vanguard will be out for a bit. You should check out State Street. For some reason, they just didn't do it. There is gold in their possession. This is like finding gold all over again, in my opinion. To what end would they not do that? And last week, State Street's Matt Bartolini was our guest. He told us that they're associated with the ecosystem in many ways, as an administrator, for example. So they are profiting from this, but they aren't actually issuing any truthfully, though. You perceive these things as if you were in the transportation industry, not the horse and buggy one. Putting cars on sale is a good idea. I thought you were in the alternative commodity asset type industry if you were selling a yield ETF. Well, that's somewhat perplexing. Although State Street has a history of being tardy, they were slow to lower their rates in response to iShares. As I mentioned before, I believe they will come to regret not taking action sooner. If you already have all these people in gold, there may be people who add some of this. So I could see them filing in 6 months or a year and then having to compete only on costs. I was surprised because it's an investment of a similar kind. Regarding the SEC's unauthorized post regarding the approval of spot Bitcoin ETFs, Eric Balchunas has a fascinating perspective. Although he maintains that the SEC's account was not compromised, the news was made 1 day ahead of schedule, in his opinion. The Bloomberg analyst tweeted this: "It seems like someone accidentally entered the wrong date when planning a tweet. Since tomorrow at this very moment, the tweet would have been totally on target. It sounds like real language. SEC-like, in my view, against some crypto dweeb playing a joke, but I suppose we'll find out after someone brought out the fact that the SEC wouldn't have included the Bitcoin currency emoji in such a crucial post. Eric admitted in another tweet that it's possible it was a hack. He followed up with the question, do you think the post was made by the SEC in a subsequent tweet, or perhaps a hacker's handiwork? Feel free to leave a remark with your ideas. Additionally, make sure you give this video a like. If you want to see more videos like this, subscribe and enable post alerts. Please accept my utmost gratitude for viewing. You better fasten your seatbelts, because we're about to reveal a unique offer. Are you interested in getting in on the action? We're sprinting a once-in-a-lifetime chance to stake a claim to a portion of the future profits from our YouTube channel. This is more than an investment. It's a chance to join us on this journey. An investor is more than just an investor if they invest. Smart financial planning is here to stay, and you can be a part of it. A sincere invitation to begin this adventure side by side. Free of corny remarks, however, that's not all. If you're up for the challenge, your aim is to become an expert ambassador. Get our film seen on all the major sites, social media platforms. If you share this, more people will see it, which could lead to increased views and money for YouTube. The worst part is this: not only would our viewership help us monetarily, but it will also allow us to make a real difference by spreading important financial knowledge. This is the cherry on top. If you make an investment, we will grant you special access to our Clever Finance Discord. Here you may have conversations with financially savvy people, share ideas with other investors, and stay up to date on all the latest and greatest. To create an account with Gigastar, please click the link below. In the description that follows, you will also find a link to my offering page. Read the offering specifics, prepare your Gigastar account, and then we can go on this exciting adventure. We owe our success to the amazing smart community, so thank you from the bottom of our hearts. Together, we're making waves, and your path is my journey as well. Best regards to